Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Okay, everybody, welcome back. That was a great segment with Jimmy Iorio. In this segment, we're bringing back one of our regular guests and all-around market master, Thiru Nagapan. Thanks for being here.
Mike, what a pleasure. It's really nice today to be back here with you guys on NinjaTrader. Missing Tom. I think he's on holiday, isn't he? That's good.
Yeah, he is. So yeah, I'm filling in for Tom. He would normally be hosting here, but he's enjoying the Breeders' Club in San Diego, California. So he's living the high life right now.
Oh,
and
nice.
He deserves it.
And here we are, working it away. Nice.
Definitely. This is the first time you and I've been on together, and I'm sure there's a number of new people in the audience. Maybe just give us 5 minutes of what you do, what your company does, your philosophy on trading, and then we'll get right to it.
Thank you for that, Mike. So a quick intro about us. We've been going on since 2010, MasterTheMarkets. We are a financial training education company. We look at more like on the market structures, probabilities, statistical probabilities. So one thing that we are very well known for, Mike, is what's very unique about us is we can tell you on any chart, any instrument, let it be commodities or stocks, whatever, how much move is left on a probability basis. And we got market structure to tell us that, which is what me and Tom have been talking about quite a few times over all the different interviews. Been going on since 2010. We are based here in London, so it's been a long time. We spend a lot of time in research, mainly price action traders, and we are fully transparent about all our results as well. So that's a quick intro. I mean, another thing about me, which people always find it unique, is I was not always in finance, Mike. So my background actually comes from science, from pharmacology. So I got my degree in Scotland. It's a very cold place. I don't know if you've been there. So then after that, then I came to London to do my PhD. Turn of events, I left that, got into finance in 2008. To make it dramatic, that was the big recession. and then after that, the rest is history. Yeah. So I've been on the finance sector since then. Yeah.
That's really a great story. Today, I think we should do a little more background too. So let's talk about two things. I'll give you a couple of topics here. One is, let's talk a little bit about that idea that how much is left in the move. So I think we should talk about that a little bit. And also my understanding is from Tom is that you use the Wyckoff method quite a bit in
Yes.
some of the things you do. So maybe just do a quick elevators talk about what is Wyckoff.
So you see what they have done actually, you see, quite interesting, a little bit background. You know, when I was invited to talk at the Society of Technical Analysis, and then they called me then after the talk to come and write their training program for the automation side of strategies as well. So I'll be lecturing for the students next year. So the same thing with the background that I gave there, I'll give over here as well, which is, so this methodology that we have, we won't take full credit for it. This was passed on by my mentor. And my mentor actually studied it from his mentor. So they actually started this work in the 1960s, 1970s, very near the Richard Wyckoff period. And in my mentor's mentor book, he always references Wyckoff quite a lot. And in summary, what I would say is the formulas that he designed actually, Mike, is just quantifies the Wyckoff's methodology. This is why Trade Guider and us, Trade Guider and Master the Markets, Trade Guider is headed by Gavin Holmes and his team. We work very much together because both the methodologies are so complementary. When you got market structure, the subjectivity is taken away, where people will say, maybe that's an uptrend, you know, maybe that is that lower time frame, maybe it's in consolidation. 1,000 people, 10,000 people won't be able to say the same answer. And fear and doubt even comes in more when you're trading that in real time. You and I know that. When you got doubt, whether has it broken the structure, is it turned into a downtrend, is it still an uptrend, is that volatility, that big seller bar, you know, has it turned the trend change already? When these doubts come in, you can't trade with conviction. So all that subjectivity is removed when you have your market structure in place. What is market structure? Basically, simply, you have your tops and bottoms quantified with certain formulas. So that's what we got. Now, on that market structure, on that foundation, when you overlay the Wyckoff, the volume structure, or any other indicator on top, it becomes a bit much more clearer to tell you which of those swing moves would you like to trade. That's in a summary.
I like that. So basically what's happening here is you have a structure and then you're trying to make that structure a little stronger by adding an additional layer to it. That's very interesting. Let's take a look at some charts. Maybe kind of go through just kind of the basics of what's the chart's telling us.
Absolutely. So, you know, last week we took a look at crude oil. Actually, in today's session, what I want to be actually looking at. So let's see over here. I want to be taking a look at two different strategies that they can get out of this structure. But like you said, some people joining in for new, I'll just give an overview first. And most of the stuff that I'll be talking about today, they can also actually, let me see if I can find that. Yes, the interview that I did with Jim as well and with Tom as well, they can find out on your NinjaTrader channel and our channel as well, youtube.com/MasterTheMarkets. It's all there on the playlist. But to give a summary, you see what I said over here, right? So you got the top being confirmed by this orange dot over there. You can see that, right, Mike?
Mm-hmm.
Yeah. And then the bottom by that blue arrow being confirmed by that blue dot over there. Okay. So that's in essence what we have quantified. Okay. Now, what's the purpose of quantifying that? In a summary, the whole objective was the quant traders thought the biggest frustration is always what? If you're a swing trader, if you're riding a swing move, and as you're riding it, it's all good, you're up nice in profit, then it comes against you, right? That's when the fear starts to come in. You're $5,000 up in open profit, and then eventually then it retraces, the small pullback. Then you're down, let's say 5,000 comes down to $3,000. You're thinking, oh no, is that going to go further down, hit my trailing stop loss, I end up with 1,000, or is it going to revert back and go up to take out the last $5,000 open profit maximum? and go to $7,000, $8,000. So how do you find that out from a probabilistic manner? That's what trading is about, on probabilities. So the first thing they did, they said, to answer that question, I need to know at least what is an average swing distance, right? Makes sense, it's logical. What is an average swing distance on any instrument? You pull up anything, right? Crude oil, gold, ETFs, bonds, doesn't matter. I want to know the average swing distance. The only way to do that, not as a holy grail method, but from a quantitative method with some validity behind it, is the first step. You go to quantify what a bottom is for you and what a top is for you.
So let me just break in there for just a second. So when you're measuring that swing, you're measuring from swing high to swing low, which you kind of point out there as that top and bottom. Do you quantify that average swing for longs and shorts separately, or do you consider a swing a combination of longs and shorts?
Very good question. So at the moment, we got it all together. So we got the bottom to top swing distances, and we got the top to bottom swing distances as well. So now, very soon, I think in about 1 or 2 months, we're going to release a filter on it, where it can just tell you whenever it's in alignment with the trend, which we call a phase 1 move, how much is those swing distances as well. So that's the whole premise of this. So that's why they went to go and quantify the bottom and top to find out the answer to this question. What's the average swing distance in any instrument or chart? So as you can appreciate, Mike, once you have got your bottom and top quantified, then you can start measuring the distance of them. And how do we measure it? They measured it by looking at one is point of entry. So when the blue dot appears, we take it from the close of the bar, the starting point, all the way to the maximum point reached, which is this one here. So they keep measuring that. So they keep collecting all of that for each individual swing distance. And then once they have all of that, then I think I showed it in one of the interviews that I did with Tom, you get a stats table like this, right? So let me move our, together. Let me put it at the bottom. There you go. Got the Smart Center Pro over there as well. So over here, so you can see that, let's say for crude oil futures over here, it tells you in terms of ATR, 80% of the time on a daily time frame, you can get this on any time frame, 1 hour, 1 minute, weekly, whatever it is. But on a daily, just to give an example, what it's telling you here that 80% of them, the swing distance, whether it's towards the long or the short, it will go 0.25 ATR, 80% of the time. 50% of the time, it will get to 1 ATR, 20% of the time, it gets to 2.75 or 3 ATR. What this does, Mike, is just manages your expectations when you are riding a move. Based on this stats, we can then design different strategies, strategy 1, 2, or 3, strategy 1 can be a short distance, high reliable winning strategy, strategy 2 for the medium, and then strategy 3 for capturing the long distance runners. But as most of you will appreciate, I'm sure the smart ones over here will be able to capture it quite fast. If you design a strategy 3, which is based on 20% of them only getting them to 2.75, usually people will say, oh, but Thiru, but then you're fighting against 80% losses, right? Or 80% of them which will come against you, or you're breaking even, whatever it is. So what's the way around it without changing the structure? Selection. So we don't trade all of those signals on the bottom to top or top to bottom. We select them. And what kind of filters can we use to select them? And that's where you can use anything that you learn from. So one of the things we largely use is the volume, the Wyckoff method, okay, on that structure. So we are piling that up on top of it. So that's, I believe, in a nutshell. So not only that, Mike, also what you can get from market structure, just to do a recap. So on market structure, once you quantify your tops and bottoms, which is what I've written over here, on the tops and bottoms, then you get number 2, your second point is you get your trend and phases quantified as well, which is what we are seeing on the chart over here, right? You can see it's a downtrend at the moment on here. And then the third thing that you also get out of this, let me see if I can do some juggling acts over here. There you go. Then number 3 over here, you get the 3 stats. Okay, so one, as I mentioned already just now, was the how much move is left, which we call the open equity, which is what this one is showing you here. And also, we also got Because of the market structure, we also got how much can it go against you, the MAE, so that when things are going against you, you don't get panicky. You understand that it's part of the volatility before it carries on to your maximum point. And the final thing we also have coded is time to. How long does it take to get to your 3 ATR distance or your 0.25 or your 1 ATR? That is in a nutshell.
Just a quick question there on the MAE, maximum adverse excursion.
Excursion, absolutely.
So to that, is that maximum adverse excursion measured from the high and low, the swing highs and lows, or is it measured from the confirmation?
Very good question. In fact, it's measured from the confirmation. So for here, if I go back to the charts, so when you get the confirmation bar here, let's say over here on the dot here, so how much did it go below the close of the bar before it went to the top? That's what we have measured. So that will help us towards placing our initial stop loss in a strategic manner. So if I bring that on the spreadsheet back again, you can see over here, let me bring back crude oil, let's say, on the daily time frame. If I placed my stop loss 1.5 ATR, right, from the close of the bar, which the confirmation bar. So from the close of the bar, I measure 1.5 ATR and I place my initial stop loss over there, which is 1.5 ATR away from the close. Then what this table is telling me is that I won't get stopped out 98% of the time before it gets to the top, the maximum point. So that's very powerful data to be trading on because you can trade a conviction, right? So even when you do get stopped out, you know it's only 2% of the time that you will get stopped out, but that gives you the conviction to keep going. Now you're truly trading on probabilities, which is backed by data and strong market structure. I guess that makes sense.
Yes, excellent. So it's interesting. You know, if you look at, and I'm sure you've done this, if you look at a chart of maximum adverse excursion, or you look at in relationship to all of the trades that, you know, in a series of trades, it's very clear, and you can see it here in the table as well. But you can see that the market just doesn't go past that point, or there's no trades past that point. And if you set your stop beyond that, and certainly you can get stopped out even if you do that, but it does give you a level of confidence. And one of the things in my mind is that traders hate to take too much heat on a trade, especially when they don't know how much heat they're going to take. In this case, they know how much heat they're going to take and how unlikely it is to take anything more than that.
Very well summarized. I couldn't have done it better. I usually always give credit to Tom being a really great student. I must say, Mike, you're really getting in there. Very good. Thanks for summarizing that very well. So absolutely, I couldn't have said it better. And you're absolutely right. It's when it goes against you, you can take on the hit, you can stay with conviction because you're backed by numbers. So that's one part of how the stats can help you. Now, today, I mean, some of the viewers who already come and listen to all of this might say, okay, so how do we put it all together? So last session with Tom, Mike, I gave a one strategy example, okay? And on that, we saw the crude oil. In fact, this is real time happening now, so this would be good to look at it together. So on crude oil, what we took a look at was shorting the market. So I want to give an example of two different strategies you can use with this. One type of strategy is where we keep it simple. We take on a daily time frame the trades in relation with the trend. So at the moment, it's a downtrend, right? So it's a continuation move strategy, the first strategy which we will look at. The continuation move strategy, right, basically looks in taking in alignment with the daily or the weekly time frame, which I'll explain in a minute. So if the daily is in a downtrend, we don't take the bottom to top moves, the blue dots, we don't take them, right? So we only take the ones with the top to bottom moves with alignment to the downside. But in the first strategy, what we usually do to increase our probabilities, we also will look at one more higher time frame, okay? So which is the weekly. let's say now if I go on to the weekly time frame, I can see that at the moment on the weekly, so that's also on the downside. So what does that mean? So on this first strategy, which is continuation move only strategy, I will align it to the weekly time frame. So whenever the weekly is in a downtrend, right? So even when the daily, let's say, might be showing a little bit of an uptrend move, where it might be a bit of a noise over here, where it's retracing a bit, but you said you're taking on the heat on the weekly time frame, I would still wait for a top to bottom confirmation on the daily, which is then direction is going on the short side, but still aligned to my weekly direction. Okay, so that is one of the strategy, which is continuation move strategy. So at the moment, this is perfectly happening. I'll show a live example on the gold chart. So let's take a look at the gold chart over here. Let me erase that away. So I start off with the weekly. Everybody will agree that that's quite strong bull move. Everybody's talking about it. You can see that also sit over here, uptrend, very nicely, easily. The structure tells you that the bottom confirmation got here. We're quite far off from that today. Nice right move over here, okay? This one's over here is by the trade guide team over there, which is just telling you on potential selling. Don't confuse that with the bigger red arrow. So the top hasn't been confirmed yet by our structure. The good thing about also the trade guide thing, when you click on them, they will tell you also the reasoning behind the bars. They're very good when we want to combine this with the market structure. So I've got my direction now on the weekly time frame, continuation move strategy. Okay, so that's on the upside, right? So now when I go on to the daily, whenever I get a bottom confirmation, which is in alignment with the weekly, which when did that happen? It happened here with that blue dot. As you can see, it's correlated with the trade guiders VSA as well, with the green dots. So everything is aligning, right? So weekly is on the upside, daily is also on the upside here with a bottom confirmation by the blue dot, right? Which you can see over here.
So just a quick question there.
Yeah.
You have two different sized arrows, right? On those orange arrows, the bigger arrow is the high that you're measuring, right? The moves in. What are those smaller arrows again?
The smaller arrows are by the trade guider system. Okay.
I see.
So it's a different system altogether based on the Wyckoff method, right? The VSA analysis. So that's when it gets powerful, when you combine both of the systems together. Especially what me and Gavin, we have observed this, is can you see this one here, the blue arrow and a green arrow then? Right? You can see this one I'm circling here, blue and a green. Yeah. So when we get a blue and a green, that means, what does that mean? That means our market structure, which by the SMI indicator, Smart Money indicator, is approving with the VSA, the Wyckoff method structure as well. When we get two arrows like that confirming, usually what you've seen, Mike, when we get the go-ahead signal by this green, by this blue dot there, they usually move much more longer towards the bigger arrow towards the downside.
I see. So it's difficult to see, but there are two different color dots. Once in a while, there's a blue dot.
That's right. So the blue dot is here, this one here, as you can see.
Yeah.
And then after that, the orange dot for the top. So the blue dot is for the bottom, and the orange dot is for the.
And there's a blue dot right on top of a green dot, right? Right where your mouse is now.
Here, you mean? Over here?
Yes.
Ah, yes, correct. Yeah, very well spotted. So this one here, that's the blue dot, which one it confirms this bottom. The green dot over here is by the Wyckoff method, which confirms that. All it's saying is that when there's a green dot below the blue dot, all it's saying is that volume is supporting it as well, along with the trend.
And so that orange dot, that last orange triangle, rather.
This one?
To the right.
This one, yeah.
So that has not been confirmed.
Exactly. So that one, yeah, maybe we should change the colors a little bit. But that one, that orange arrow over here, it's not the same as this orange arrow by the Smart Money indicator. That's by the VSA, the trade guide thing. And when you click on that, it will tell you what it's telling. It's no demand, it's saying. You know what that says is, usually what we have observed is, when it says that, no demand, and then we had a big red bar after that, it's coming to an end of this swing move. Usually what you'll see is that will start to slow down, and usually very nearby you will get another top confirming with an orange dot coming up.
I see.
Right? So that's in construction. So in summary, on the first strategy, just to cover up over here, I know I don't have much time, continuation move strategy, align it with a weekly time frame, what we got, which was the uptrend. And then on the daily, the confirmation bar came here. Again, alignment with direction on the daily. And then we apply the volume and the Wyckoff method on top, which I'm still getting a green dot on the bottom, along with volume confirmation, which I've got over here at the bottom as well. So everything is aligning. So that's a good one for us to write the move. As we write the move, where's the targets? That's when you can refer to the OE tables, which I said how much move is left. And then you can trail your stop loss accordingly. So that's on the strategy 1, Mike. So it's a continuation move strategy. Strategy 2, what we do, we still do trend correlated, but we capture a turning point before we get that on the higher time frame. So let me explain. This was the one that I was explaining on the last session with Tom on a multiple time frame strategy. So over here, what we got is, so which I've indicated here. So you see on the crude oil, which is what we are having at the moment, if we got a downtrend, right? And then we had the bottom confirmation here. So in the downtrend, we're having a bit of a retracement move, okay? Where the buyers have come back in for a little bit, but the trend is still down. So, and you and I know that nothing moves in a straight line forever, right? So there's a bit of the retracement starts to happen in that downtrend. But if the trend holds, right, this phase 2 move or the counter trend move, right, which we're experiencing, will finally turn back down and then come back into phase 1, alignment of the trend, and then you will get your orange arrow with the orange dot flagging up according to our structure, okay? So as you can see, the blue dot came here, phase 2 confirmed. That's the downtrend phase 2, right? Confirm. After I get the phase 2 confirmation, then I go to my lower time frame to capture that potential top, which will become that potential top on a lower time frame, which will become a weekly confirmed top. That's the whole premise. In other words, all I'm saying is, if I can capture a daily or a 4-hour confirmation top, and if I capture that right with selection, then that 4-hour top will become a daily top, and then will become finally the weekly top with an orange dot. That arrow and the dot will appear here. At the moment, we don't have a weekly confirmation. That's what strategy 2 is about, right? Still a potential top, which is what I've said over here, weekly potential top, question mark, this level here. So what we did then, as I mentioned in the previous recordings with the interviews over here, we called it out short, and we were looking to enter it around here on the low of that bar over here, right, for potential top. Because on the 4-hour, we saw that as a confirmed top. We saw a little bit of up movement over here, but that didn't deter us from holding on to our position. And you saw that Monday started as a big gap down, and then that's what we got, and we're still in that trade, even though it's moving a little bit against us today, because we know the volatility numbers and all that, our MAE numbers. So we'll hold on to that trade. And what's the premise of that in strategy 2 is that we believe that the selling will carry on further down, and eventually we'll get the orange arrow and the orange dot to confirm that weekly top, basically. So it's all quantified, quite systematic, and you will know what you're doing, basically.
You know, I mean, obviously, crude oil, there's always it can always be news driven, and so maybe that's what we're seeing a little bit today. But yeah, this has been really interesting. We're out of time. This went by so fast, but I'm sure we'll have you back with Tom pretty soon. So thanks so much for spending this time with me. How can people find you?
So the best one I always say with Tom is always go to 7stepstoctp.com, which is this one here, if the team can help to put that link over there. So 7 steps to CTP. What this is a 7-part video course over here that they can get, and then they can watch once they put their name and email. that'd be the best way to learn about all this market structure and how they can put everything on top as well. That'd be the best way.
Fantastic. All right. Well, thanks so much for being with us. We'll see you again soon. Thanks, everybody, for joining us. We'll be back in just a moment with Tanya Trades. Thanks.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Welcome back, everybody. In this segment, we have a very special guest. Tanya Trades is with us. Welcome to everyone coming over. Tanya's Army joining the chat. Thanks for being here. You can join the chat on YouTube. You can join the chat on NinjaTrader.com. So definitely thanks for being here. Tanya, thanks for being with us.
Thank you for having me. I appreciate it.
So you're in the middle of a trade right now. Why don't you talk us through that?
Yeah, I've been basically just trying to, well, today I was pretty much long biased.